Millions of Americans in their 30s, 40s, and 50s are walking around right now with a secret, unspoken financial safety net in the back of their minds. They know the current economy is mathematically broken. They know the housing market has locked them out. They know inflation is eating their paychecks alive. But deep down, they hold on to one comforting thought. They believe that one day, when their aging parents pass away, the inheritance will finally give them the financial break they desperately need. They are counting on the family home, the retirement accounts, and the life savings to wipe out their student loans and secure their own retirement. I am here to tell you that this safety net is a complete and total illusion. You need to immediately assume that you will inherit absolutely nothing. Welcome to the 2026 Inheritance Heist. While the mainstream media deliberately distracts you with the daily stock market ticker and political theater, a silent, legally sanctioned wealth transfer is actively wiping out the financial legacy of the American middle class. The culprit is not a sudden stock market crash. It is not a new income tax bracket. It is the catastrophic, completely unmanageable, and highly predatory cost of long-term elder care. Let us look at the brutal, terrifying statistics that financial advisors and estate planners are scrambling to deal with in the middle of 2026. If you have an aging parent, you must understand the mathematical reality of the modern healthcare system. Over half of all Americans turning 65 today will require some form of long-term care in their lifetime. That is a coin flip. And 1 in 5 of those individuals will need that high level of care for more than 5 full years. Now let us attach the actual unvarnished price tags to those statistics, because this is exactly where generational wealth goes to die. As of late 2026, a private room in a standard nursing home now averages more than $135,000 a year. That is over $11,250 every single month. If you settle for a semi-private room sharing a tiny space with a stranger, you are still looking at roughly $118,000 annually. And if you happen to live in extremely high-cost states like Alaska, Hawaii, or parts of the Northeast, those facility costs can easily explode to over $390,000 every single year. But the nightmare gets even worse when you factor in cognitive decline. If your parent suffers from dementia or Alzheimer's, they will require what the industry calls memory care. Memory care facilities require specialized locks, higher staffing ratios, and intense behavioral management. Because of this, memory care easily adds an additional 20 to 30% premium on top of standard assisted living costs. You are looking at a system that can easily vaporize $15,000 a month, month after month, year after year. Even if your parents desperately want to stay out of a facility and age in their own home, the alternatives are mathematically crushing. Full-time in-home care averaged about $80,000 a year in 2025, and with recent wage inflation, that number is creeping closer to $90,000. Do the math. A multi-year stay for a single aging parent can easily consume $250,000 to well over $500,000 of a family's hard-earned assets. If both parents require care, the estate will be completely annihilated. This is where the massive deception of the American healthcare system reveals itself. Most middle-class families falsely assume that because their parents paid taxes their entire lives, Medicare will step in to cover these catastrophic costs. This is the biggest and most dangerous lie in American personal finance. Medicare explicitly does not cover long-term custodial care. Custodial care means help with the basic activities of daily living, like bathing, dressing, eating, and using the restroom. Medicare considers this a personal problem, not a medical problem. The absolute maximum help you will ever get from Medicare is coverage for up to 100 days of skilled nursing rehabilitation, and this usually only applies if your parent was formally admitted to a hospital for at least 3 days prior. And even then, it is a trap. Medicare only pays 100% of the cost for the first 20 days. From day 21 to day 100, they hit you with a massive copay of $217 per day. After day 100, Medicare completely washes its hands of you and cuts off all funding. So what happens on day 101 when the government money stops but your parent still needs round-the-clock care? The facility's billing department turns directly to your family's private assets. They will systematically drain the checking accounts. They will force the liquidation of the traditional IRA and the 401k. They will empty the brokerage accounts. And eventually, when the liquid cash is gone, they will place a lien on the family home and force its sale. The system is mathematically built to force total financial depletion. The only government program that actually pays for long-term care is Medicaid. But do not confuse Medicare with Medicaid. Medicaid is strictly a poverty program. It requires seniors to completely spend down their lifetime of savings to near poverty asset limits before the government will step in and pay a single dime. In most states, that asset limit is a microscopic $2,000. Let me repeat that. Your parents must drain their net worth down to $2,000. They are forced to legally impoverish themselves. This is the silent purge. It is not a dramatic headline on the evening news. It is the slow, agonizing drain of a lifetime of middle-class savings directly into the pockets of massive private healthcare conglomerates and real estate investment trusts that own these facilities. And it disproportionately blindsides the exact families who did everything right. The families who saved responsibly, drove used cars, and paid off their 30-year mortgage, only to realize that the system was perfectly designed to take it all back at the very end of their lives. The anger you should be feeling right now is completely justified. Your parents traded their youth, their health, and their labor to build a legacy for you and your children, only to have it siphoned away by a broken, profit-driven medical machine. But anger is not a financial strategy. Despair will not protect your parents' home. If you want to protect your family's wealth from the 2006 Inheritance Heist, you have to execute legally sound preemptive defense strategies immediately. You have to learn how to play the game the way the wealthy play it. Here's the exact step-by-step masterclass blueprint to protect your assets and secure your family's legacy before it is too late. Strategy number 1, you must completely shift your retirement mindset today. You must build your financial future, assuming that your inheritance will be exactly $0. You cannot rely on a ghost to fund your retirement. By treating any potential inheritance as a complete write-off, you force yourself to take extreme ownership of your own financial mechanics. You must aggressively fund your own Roth IRA, buy your own real estate, and build your own dividend portfolio. If a miracle happens and you do inherit something, it becomes a massive bonus to your life, not the foundation of your survival. Strategy number 2, investigate hybrid long-term care insurance before the health window closes. Traditional long-term care insurance has become a nightmare. The premiums are astronomically high, and if you never use the care, the insurance company simply keeps all your money. It is a terrible bet. However, the industry has evolved. You need to look into hybrid life and long-term care policies. These are permanent life insurance policies that allow you to accelerate the death benefit while you're still alive to pay for facility costs. If your parents never need the care, the policy simply pays out the full tax-free death benefit to the heirs, ensuring the capital is not completely wasted. Strategy number 3, execute the Medicaid Asset Protection Trust. This is the ultimate impenetrable shield used by the wealthy elite, but you must act early. You cannot do this on your own. You must hire an elder law attorney. You can transfer massive assets, including the family home and brokerage accounts, into an irrevocable trust. Because the trust becomes the legal owner of the assets, Medicaid cannot count them toward that $2,000 poverty limit. The house is safe. The money is safe. However, there's a brutal catch called the 5-year look-back rule. The government is not stupid. When you apply for Medicaid, they will audit 5 years of your financial history. If they see that you transferred a house into a trust within the last 5 years, they will hit you with a massive penalty period and refuse to pay for your care. Therefore, you cannot wait until your parent has a stroke or develops dementia. This fortress must be built at least 5 full years in advance of ever needing a nursing home. Strategy number 4, uncover hidden veteran benefits. If your aging parent or their spouse served in the military during a designated period of war, they might be eligible for a massive program called Veterans Affairs Aid and Attendance. This is an incredibly underutilized tax-free monthly pension, specifically designed to help veteran families pay for in-home care or assisted living. It can provide thousands of dollars a month in pure cash flow and save the family estate from rapid depletion, but the government will not call you to offer it. You have to proactively track down the service records and apply for it through the Department of Veterans Affairs. Strategy number 5, have the uncomfortable conversation right now. The biggest reason middle-class wealth is destroyed is because families are too polite or too scared to talk about death and decay. You need to sit down with your parents this weekend. You need to know where the bank accounts are, what their wishes are, and whether they have signed a durable power of attorney and a healthcare proxy. If your parent loses cognitive function and they do not have a power of attorney in place, you will be forced to go to court and spend thousands of dollars to get a judge to grant you guardianship just so you can pay their bills. The American middle class is being systematically hollowed out from both sides. Massive inflation and high interest rates are stealing your current paycheck, and catastrophic long-term care costs are quietly erasing your family's past labor. You must act now. Change your retirement mindset, leverage hybrid insurance policies, establish asset protection trusts with an elder law attorney, and claim the veteran benefits your family earned. If this deep dive opened your eyes to the terrifying reality of the long-term care crisis, hit the like button right now and share this video with absolutely anyone you know who has aging parents. Has your family already been forced to sell assets, empty bank accounts, or deal with the Medicaid spin-down process just to pay for a nursing home? Let me know your story in the comments below. I read every single one of them to understand exactly what is happening in your community. To stay ahead of this corrupt financial system and learn exactly how to protect your wealth, make sure you are subscribed to the channel with notifications turned on. Secure your legacy, protect your family, and I will see you in the next video.